feel good. Baby.
All right. So hey everybody. So today we're going to learn about why to set stop losses. Okay? So it's always good to protect your money so you don't get stuck in a position you do not want to be in. So what I mean by that is that sometimes no one can predict the market, and no trader can. And so I'll be showing you guys later on how we analyze these markets and how come we get in certain positions and why we get in these positions. But sometimes they do go sour, and once we draw these lines to confirm that we're no longer on an uptrend, we're on a downtrend. Now, a prime example of this would be I'm going to put this in a little bit of perspective of bigger money, so you can sort of guess why I'm saying this and why sometimes to become the best trader, you got to learn how to take losses too, just as good as you can take wins. So I'm going to really try and just emphasize in how important this is with big money, and how don't get emotional with your trades. So let's say we have $100,000, okay, at this buy point on this coin. It's went up. Now it's broke trend, and say we've went at a 20% loss or 10% loss. We'll go with 20% at this instance, and that's confirmed that it's broke trend, okay? So you've lost $20,000. So now your money's worth $80,000. It's back in your account, all right? Now, we could then later on buy back in on a market that's over here on like another coin, and then it starts running, and we make our money, we make that 20% back so easily, if not more. And then bang, we're on trade again. This is off another coin, just say we've jumped in. But if you want to get emotional with your money, now it can bounce back up. So that's why I'm saying that these stop losses can be your worst enemy in a way too, because I've woken up before and it's hit my stop loss, but then it's bounced off that loss and it's bounced off that line, and it's bounced up and started having a run, and I've missed out and I've lost money. But the thing is that you do not want to get caught up in the trade. So that if once it breaks trend, sometimes it can literally just bleed the hell out, or it can get stuck and consolidate, and you could be holding that coin for the next 6 months. So now your $20,000 loss there is now down to say $60,000. So your $100,000 worth $60,000, and it's holding that $60,000 for the next 2 months, 2 weeks, year. Who knows how it could hold until it gets back up to your $100,000, because they do say that you don't lose until you sell. That's one of the sayings that people say. Yes, it is right, but sometimes you can get stuck there. Now the thing is that if you've taken that 20% loss, but then your money's now back in your pocket, you can then jump onto a trade that could go up another 100%. So now you get what I'm saying? Now your money, now you're worth more. Now that $80,000 is worth $160,000, whereas old mate over here that's kept it, he's crying. His money's worth $60,000 for another 6 months. So you get what I'm sort of saying about that? That's my I'm just using those big numbers so it can really hit home for you guys that do not be emotional. Okay? Now I can't too just tell you guys when to set these stop losses. You guys need to make also. I can sort of help you guys in the market reviews that I'm going to be giving you guys, but you guys also too have to make your own judgment, and also make your own judgment on how much money are you prepared to lose. So that's another good thing about this, is that you can go in there with you can sort of go into a trade putting a bit more than you feel, because it's not like you're going to the it's like you're going and betting this on a gambling or at a roulette where you put $10,000 down with a casino and it's gone if you lose. Whereas here you can sort of set those stops to say, get me out after a 20% loss or 10%, whatever it may be. Okay, now the next thing we're going to talk about too in this lesson would be trailing your earnings with stop losses, okay? Because anyone can make money on a trade, but learning how to lock in profits is what 90% of traders fail to do. So now what I mean by that is that, and like in this lesson, I'm gonna show you guys, on my charts on TradingView how I like exactly what I mean and go into more depth. But let's quickly have a quick run through what that lesson is going to talk about. Is that when say you've had a run, okay, and you're down here and it's went up, and we've had a couple of earlier waves confirmed down here. Now this is its second leg. It's going up. Now you want to, once you're up to here or so around here, you want to start trailing yourself with stop losses. So once that market breaks trend a little bit, you can get out of that trade. Now do not be emotional that, it could bounce. If you sell out here, it could bounce off here and then bang, boom, right to the sky. Could go to the moon, as they say in the trading world. But you've got to remember that how much profit you have made is amazing. Whereas a lot of people do not put any stop losses, and they just think that, hey, 1, 2, 3, 4, and then this next leg, this is the Elliott wave theories that we're going to be going over later. So don't worry if you don't understand what this is yet. But these are they say the market moves in 5 wave cycles when it's going up on a trend. So 1, 2, 3, 4, and everyone thinks it's going to boom, but it doesn't. Now, old mate has not set his stop loss. Okay, he's bought back in down here. Don't worry about that buyer. He's had a nice run, and he's up. Just say he's up honestly like 100% on his money. So now he put $100,000 on. He's up $200,000. Now if he sets stop losses around here, so he's like loses like 10%. So he's lost like $20,000 of his $200,000. He's still up in profit. Okay. Now if he tries to just hold and tries to go to the moon to make even more money, and then it bleeds out, and now he starts getting frustrated around here. Like, this is where emotions come into play, because that person now is like, shit, I do not want to lose right now. I do not want to, because I had $200,000 up here, and now my money is only worth, say, $160,000. But realistically, you're up. You only put in 100,000. You're up 60,000. But that's where the emotions come in. See, you become you get more greedy, and you do not want to. You want to get back your 200,000 now. It's just like gambling. Okay, so that's why once we start going up and we get up into those stages, we've got to be smart as traders, and I'm going to help you to be able to pick those points on where, especially once you're on a run, you need to really learn how to set stops, okay, and to not get emotional. Now, another great thing too with these stop losses, and I'm going to show you how to set these on Poloniex and Bittrex, but I'm going to just show you on Poloniex, but it's the exact same thing on Bittrex and any other trading platform. What you need to do is, and to not get emotional, is to know that, this could also help with your emotions here, is you can also prompt in to say, sell out 80% of your money once it gets to here, and the other 20% let it ride. Okay, so if it does have a pump, that 20% is still going to pump. So 20% of $200,000 is $40,000. You've still got it riding, whereas you only put $100,000 on here. So it's still a big trade if it goes up another 50% or 100%. So you're still making good money. So that's another way to also help with your emotions if you don't want to fear on missing out on that next leg, or you're scared, you don't want to set that stop loss. That's another way that I get around it too, and go, okay, if I think the coin's going to go up, but I'm going to set my stop loss here, sell out 80%, take my good earnings, and if it does go, still got 20% more. And then with that extra 20%, I may instead of setting the stop loss here, I may set it down here. So I still am in really good profit there, and once it confirms that breaks that trend, it is broken. So yeah, that's what I'm going to be talking to you guys about. I'm going to be showing you guys some charts. Now, in our next lesson after this lesson, so part 5, we're going to be going over market psychology, and TradingView. So learning market psychology, for you to be successful as a trader, you need to understand why most people are unsuccessful. I'll be teaching you how to control your emotions. And then at the end of that lesson, I'll be teaching you guys how to set up a TradingView account and teach you how I set up how I put all my extensions, and we'll go through all that once we're on the next lesson. But this is just a quick guide on what I'm going to show you, and I'm going to show you guys exactly like all this stuff here, and this all means, and I'll show you how the market moves and how all these emotions come into play, like how fear of missing out kicks in, and euphoria, and why most people are losing on this market, okay, and why people panic sell, and I'll teach you how to identify new market cycles so you can get into trades when it's in. People are, you want to be getting into trades when there's about the hope starting. Disbelief is also a good time to buy, but it's a very hard time to buy in. Okay, it's the best time to buy in, but it's also a very hard time to buy in because you don't believe in the market. Okay, and a lot of people don't care how tough you think you are. When there's at the disbelief stage, it's very hard to jump into that coin because you think it could dip even more. Okay, but once you start getting that run and that confirmation in the hope stages, that's when it's a nice time to jump in, I think. But it's very good to get in on the disbelief. But most of you will be jumping in here on the hope and riding that wave all the way up. We're not getting emotional, and we got to, and then learn when to sell. Okay, don't be selling down here. The market always does that complacency. That's where we want to sell back at. So if we miss the euphoria to sell off, we want to sell back in on the complacency. Now, we don't want to also get too emotional and say, no, it's going to pump again. And then that's when the whole reason the market does that complacency there and dips, heap of people sell out, it makes their money, and then it goes up. And it tries to get all these people to think we're buying back in or hold, and then bang, it just bleeds everyone out and takes everyone's money. So we're going to go through all that, but let's jump into the lesson now. We're going over to Poloniex. Like I said, let's get over to Poloniex. Bitrex, it's the same concept as Poloniex. So what we do is we go to a coin. So I'm going to look at Strat for an example. I've got some money on Strat. This is how much I have here. If I can get that there. That's how much Strat I have. Alright. Now, the stop. So this is what you guys need to really... we'll try and put some blog posts about this kind of stuff too, and we'll email it all out to you, or we'll have another side part of the course. But first of all, I wanted to... You guys are the early access. People haven't got access to this, but if you've joined up a little bit later, then there'll probably be a blog post on this, like detailing it a bit better, so you can go back and read and refer to it instead of watching the video. So keep an eye out for that. Should be on your sign in section on the on your account once it's up. But your stop. So first things first. This is the price. That's the BTC price to Strat. So one Strat equals that many BTC. So what I like to do is, I like just to put that price in there. Now this is when it's going to stop you out of the market. So you'd go and have a look on your TradingView, but let's just keep this simple and not confuse you guys right now. Just say look, about there, once it confirms it's under that price there, 13.17. So what I do is change this to 13.17. Okay. So what happens is that once the market hits that number there, it is going to then trigger. So Poloniex is going to go bing, 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 bing. Jamie Abella it's been a trigger set in. He wants to sell out his Strat. Okay. And then you can also put a limit in on the, so it's the same as the buy. It's the same thing but the opposite. So this is when the trigger is going to be set. So it's going to start to try and fill your orders in. So your buy orders and sell orders. These are people that want to buy it. You know, there's a heap more down here, but you know, look how many people are trying to buy it at 17, 13, 17. There'll be a heap of people trying to buy it then if it goes down that far, especially strap. But okay, I'm not going to try and get too far down, but you see what I mean. So what will happen is that, let's try one more time. Yep. Okay, we got it. You don't need to go and look at this, but I'm just showing you guys exactly what it is. 13, 17. Okay. So once we hit that price there, look, there's not really any buy orders for 13, 17. So it's not going to be able to sell it at that price. But what will happen is that's why you've got to set a limit. The limit you want to sell that coin for, like the most lowest point you want to sell that coin for. Because what can happen is too, man, if things take big dumps, you know, you're not going to always get that first initial price. So if you don't make the gap big enough, especially if you have big money, man, if you have a lot of money on these coins, there's not going to be enough buy orders to fill your order, your sell order. So you need to make sure that you set accordingly. But go on that's up to you guys how to use it. Going to pick all that. I'm sure you guys aren't messing around with hundreds and hundreds of thousands of dollars, so you should be able to fill in your order. But don't be stupid with how your limit is. Don't make it too low and don't make it too high, because sometimes it won't sell out. So look, I'm going to go 15, or I might even go 10. So I get this number, copy it, or who knows? I might be safe because I've got a heap of money on the market. I want to make sure. So this is the, and then the total BTC is how much you'll be given for that coin. So let's have a look at that price. If I sold my strut right now, so see there, that's the difference in BTC I would lose. So if we go back up to 17. So see the difference, it's changing there for me. So the difference in 13 and 13, 17 is really not that much difference, especially when we're talking big money. So look, put it there. You could even honestly go and put 12.90. It's whatever you're happy with. Okay, doesn't really put it that much down. This is all going to be risk management. That's something that I can try and teach you guys, but I'm not here for that. I'm here to teach, give you the guide, and then you guys to make these judgments, because I'm only teaching you what I know. I'm not a financial advisor, like I'll say every lesson. I'm not here to give you financial advice and tell you when to exactly do things. I'm here to tell you rough estimates, and then especially with these stop losses, this is where your head comes into game and your emotions come into game, and this is where you need to be a strong trader, and this is why I'm here to teach you guys how to do that. But simple. You can also set buyers too, so the opposite way. Once it triggers there, the most I'll pay for it. So we're going to go sell, and submit. And now I know that I will lose I'll lose just over a 0.0 of a point of a Bitcoin, you know. And then what happens is you go up to your orders. I am not a robot. I'm definitely not a robot. I might look like a robot right now. I got an infection here in Mexico. My drone pretty much sent me to hospital. Get injected with 6 mils of who knows what. Which it it wasn't comfortable. But back to this. So there we go. Now your order's there. You can see, hey, my price I'm going to receive, blah, 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 if it hits that loss. Now, if you don't like what you've done, you can cancel that. So there we go. We cancelled the order. Done. Okay, guys. So I've taught you now how to set a stop loss, what stop limits are. Now we're going to teach you guys about why it is so important. Now those things that I just taught you there are also, that's how you cross-reference, that's how you, sorry, not cross-reference, that's how you, you use the exact same thing that I just taught you there on when you position yourself in a trade, is then to also how to position yourself when you're in a winning. So how to sell out once you're at a win, once you're in profit, I should say. So just say, look, I'm not lying to you guys. I got in NEO at around $7 at one stage, bought more at $13, $14 and $15. I was just trying to move money over to my certain exchanges. I had money on other exchanges. That's another thing too. You want to make sure you get your Poloniex account, your Bittrex account. Make sure you have all your two-factor authentications on both them. So go up into the settings and set all that up. Okay, it's pretty easy stuff here. Make sure you go up there and set it all up, because, and that's the same thing I taught you in the course 1. Make sure you set all that stuff up. Okay, so, but then I hadn't had my, stupid me, I didn't have my Poloniex fully verified, so I had like a withdrawal limit of $2,000 US a day, and I had a heap of money in this account that I had to transfer over to my CoinSpot because, or Bittrex, because they wouldn't, they don't have NEO on here, on Poloniex. So that's why it got me, I had to keep buying in lower and lower, like higher and higher, because that's when it started pumping. So make sure you guys go and get yourself fully verified passports and do all that, because they don't just update it within 2 to 3 days. You don't have time. Once the market starts going, it's going. So let's have a look here. So say you get in here. Okay, see confirmation, 1, 2, that's way back there. I got in on the second, perfect timing to get on NEO. Now this is what happened to me, or this is what can happen to you if you do not set stop losses when you are in profit. So learn to not be emotional. Hey Trav, can you answer that? And make sure, just tell them to shush too, because I'm doing this video. Like, go and speak to them out there. No, speak, no, tell her 5 minutes. 10 minutes. I'm doing something. Okay, sorry, I had a interruption at the door at the hotel here. So I'm in a resort here in Tulum, Mexico now. All right. So what's happening is we need to learn when to get. So I just got confused then because of the lady that came to the door. So what we need to learn is make sure we keep our profits locked in, okay, and don't be too greedy, because there's always chances to buy back in the market. I know sometimes, you know, the market can take off, but don't get emotional. There's always waves. As you can see here, we had a massive run up to like $55 here with NEO, but there was always points where it went down, up and down, Elliott waves, within waves. Even though that's a big wave there I'm showing you, it went 1, 2, 3, 4, 5. That's all within that 1/3 leg. So what happened was, so once, just say you got in here at $10, which is a beautiful position, and the market starts pumping. Now, once it got to this 55 and started getting up to these, this is FOMO kicking in here. You can see the leg went like that far, and then that next bang, from that 43 up to 55, that was complete FOMO, fear of missing out, because we can see these candle wicks. It was just, they were just sell orders that were set by smart traders just to sell out. Like, they were just like, hey, if it gets to that point, they probably had like 20%. They probably sold out like down here at the $50 mark, and they probably had like 20% of their money still on the table. So they're not emotional if it does go up. They don't care if it still goes up, because they're still making money. So they're like, sweet, we've still got 20% on the table. And you got to remember, 20% is 20% of what it is there. So just say you had $100,000 in it. I'm not going to work out the maths there on what it would have went up to, but just say you had you've made a heap of money,
and you take off 80% of your earnings, you still got 20% on there. It's still a lot of money. It's still a lot more than it's probably more than what you've had in down here that you originally put in. So you've still got a heap on that trade. So these guys would have set all their sells to like $49 or $48, and then that little bit there were just all sell orders for all these big whales that were like, sweet, if it gets to that price, we're going to sell out. And it did. So what we need to do is we need to set stop losses. So once we start getting into a point where it was at that $49, if you don't want to sell out and you want to be emotional, set yourself a limit there. So we should have set out, if you were trading this, you would have had a limit for $47 to sell out or something. So don't get emotional. You've made a shitload of money on the way up. Who cares if you lose $10 on your coin or $12? Because otherwise then, look, A, B, C, D, E retracement. There's a support line. The market's still held this support here. You can see the candle wicks have hit it. And that's a good sign for me. It's still holding. But when I say don't get emotional, like, who cares if you sell out here at 47? Okay? Now look, you could have bought back in down here at more buy, and I would have been doing that. When it candle wicked down here and went up again and the market showed support again, like I would have tried to buy in here again next time here at the $31 or even at the $35 there, because you sold out at 47 or 45, so that's like $10 per coin you're getting a cheaper price. So now it's consolidating, and this is where it will go for that. When I do these legs too, it doesn't, as you can see, it doesn't just go up where it went. So from here, it could just, boom, bounce up. I'm going to teach you guys about these RSIs and stuff, and what time frames to look at. So this is in the 4-hour time frame. These are the good times to look at these these Elliott waves. But I'm going to also quickly, because this is going to go into I'm just touching in with you guys on this kind of stuff. So don't be fearful that you don't understand what I'm talking about, because you really shouldn't. But this is just getting in your head, so you're slowly starting to learn these things. And who knows, if you want, you can go and investigate more into what these things are. But don't start using them, but don't start going off trying to trade by yourself, please. So I'm going to show you something pretty cool here. Alright. Whoa. Just because I'm at the hotel internet. Okay, so that's roughly, that's roughly where it went to. So now, I take this to this low here. Let's fix that up a bit, because it will do it perfectly. That's the top. And you watch this. We go on that bottom of that wick. Okay. The bottom could really be there, justified as, but it's a big wick there. And more to me, it consolidated about there, as that would be the bottom of year 2, not that, because it went back up and down. So, but either way, these are only little microscopic sort of things that are going on here. I'm going to move this over for a second, and I'm going to do this again. Okay. So you see here, that Fibonacci extension that I drew up on that leg there, within that leg, if you have a look at that, did you notice that you could have sort of judged on this next leg that was coming on inside that third leg, that Fibonacci? So what happens is these waves are waves within waves. There's little waves within waves. We go on smaller time frames on these on these candlesticks, you'll see there's even more waves in between this little run. They'll be like up and down, up and you can see them even here, up and down, up and down. And then when you go on those smaller time frames, you can see those candles like they define. You can see them way more. You can notice the Elliott waves within inside the waves way better there. But see how I drew that Fibonacci extension on that wave, and then from this one, this is where I could have set my run to say, look, once it hits about there, I'm happy that once it drops on that 68% retracement there, I'm out. I'm out for the next wave. Okay? Or I'm out once it hits the 78% retracement. So we could have sold out at 53, and then once 53 when it was there, we could have then set stop losses to at 51 if we were sitting there watching the market. All right? That's how you got to learn. Or drew them Fibonacci extensions, sold out 80% of our money at the 53 here, or at that 78 there, which is what a lot of people would have done, at $51, sold out 80% of our money because we just thought, look, even if it does go for another leg up, it's likely that it's going to drop a bit. So it could have dropped down to about here and then went for another leg up if it was going to keep pumping. It wasn't just going to go from here, just boom. Like it could possibly do that, but this is where you got to analyze your risk and just start being smart, not just gambling. We're doing analyst and we're trying to judge where the market's going. So I think that we could have. I need to upgrade my thing again. So I don't want to confuse you guys there, but see, I've just touched a little bit analyst on how you could have actually got the run there and picked where your stop losses are and whatnot. So we're going to keep learning all this. But now you guys know the basics. You know how to do a stop loss. So when I start talking about these Fibonacci extensions and then maybe I'm going to set a stop loss there, you can then go back to the course and then refer to this and then use what I've taught you now to then make those judgments and then put those stop losses in yourself. Because once this course starts running and we start doing weekly like updates, we might be doing like bi-weekly updates on our coins. Depends when needed. Sometimes the market doesn't do much for a couple of weeks. We'll still be doing updates and talking about our coins, but yeah, some weeks we're going to be putting out more videos than others on the market, on our current trades. We're not going to be sitting here teaching you this stuff anymore. It's going to be me talking about it like I just did then, and you guys will start to understand it after I do a lesson on it, and then you can go back to the lesson and go, oh, okay, I get what he means now, why he done that on that new trade. Because for me just to go and draw up all this stuff here on a previous market cycle that's easier. That's easier than actually predicting what's going to happen next. So let's have a look here even. And I'm not trying to confuse you guys. I didn't really double wick there, so I'm just going to go down to there. What did we go down to? We can be... See, all different traders have different perspectives on that. Didn't double wick, so sometimes you wouldn't put your bottom to there. This one double wicked up the top, so there we go. So on this run here on NEO, it's went up. You can see this is how you can also trade like full daily trade like type things. It went up here. You've bought back in down here on the bottom. As soon as it went to there, and it's double wicked. You could have sold out. And look, it's went down 50% there. And boom. And hopefully now this coin, as long as this holds something around here, 36 to at most lowest at 35, NEO's looking good. And the worst case scenario here is that once it hits 32 again, if it breaks trend on the 30 mark, then we could be looking at a downtrend on NEO. But still got lots of room to move here, so don't be scared. And this is how we judge all this. You know, people message before this course. People message me all the time, like, "Oh, well, fuck, Niaz went down this much." It's like, dude, chill the hell out. You know, I've drawn up my Fibonacci extensions. I know what's going on. I'm not here to, and I can't go and tell someone over Facebook, hey, or WhatsApp or whatever the hell, whatever application they're speaking to me on, hey man, you know, this Fibonacci extension didn't hit this retracement, blah, 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 because they don't understand that kind of thing. That's why you're in this course. So now you can feel comfortable within your own trades and make your own analysts. So anyway, guys, that's enough for me. I will blubber on all day, but keep posted for the next video. And, or if this course is old now, learn what I've sort of taught you here, and then go and watch the next video. And then where we're going to start getting into a bit more of these Fibonacci extensions, what these clouds are up here. I'll show you see, like, there's a red cloud there, and, you know, see how that's on a downtrend. Sort of broke that downtrend now, so hopefully we're going to teach you all these kind of things. Show you here, see, look, too, perfectly 5 waves, 1, 2, 3, 4, 5. It did FOMO up a bit more than I expected there on that leg, but I drew it up perfectly. There we go, it went up to there. But see, like, what? Honestly, if I got in down here on my leg, library, and I sold out up there, you know, you can't be emotional to say, oh shit, I should not have sold out, I could have sold out here. Look, you've had such a good run. Okay, and then that's where the market tricks you. It goes up to there, and then all these people kick in for FOMO. No, it's going to the moon. It's going to the moon. Man, LBC already went to the moon. And then here we go. Boom, boom, boom. We bleed out. We're on a downtrend. Okay, we're down here. Oh, Elliott wave, man. It's coming back up. More people buy in. Bleeds out. All right, that's enough for that. Yeah, keep posted and keep stacking them